If you're tuning in now or after the live, I greatly appreciate you tuning in. I greatly appreciate the continued support, and I appreciate everybody who continues to tune in during these very highly stressful times in the market, and a time in the market where most people just don't find it worth their time to trade, or they think, this is only a losing situation or proposition. The thing we need to remember is that this is a long game here, ladies and gentlemen. This isn't going to happen overnight. And honestly, if you do your due diligence and you pay attention to the market cycle, you can advance in this rather quickly. But as it is right now, we will go with as such. So let me timestamp this. Good mid-afternoon, 2:03 p.m. Eastern Standard Time on this Wednesday, October 5th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I appreciate everybody tuning in. Mark, Mitchell, thank you so much for showing up already. Make sure you hit that like button, as it will greatly help push me through the analytics. It will help more of us get together, especially on this midday market report. As it's been getting bigger and bigger each and every week, we started with about 25 people who would show up, maybe 400 views on the videos. Now we get a consistent 55, 60 people in here, typically, sometimes 50. But the videos are getting 600 plus views, which it makes me very happy that so many of you appreciate the midday market report. Scotty, welcome in. Terry, good day to you as well, love. I appreciate you tuning in so much. And thank you to the early goers. We've got a lot to talk about in the market today. Basically, just a quick synopsis here. The Dow, yields, 10-year, crude, all dropped. Cryptos dropped. Right now, though, we have the DXY rise a little bit, but it's just basically coming to a bearish resistance. Commodities, precious metals, same thing. We're coming back into that bearish resistance zone. So if we do end up coming up here, there's a very strong chance of rejection. So we will take definitely a closer look at this as we get into the midday market report. Other than that, if you want to take a look at crypto, make sure you watch my XRP video from earlier. I try to have the midday market report outside of crypto because I do typically daily lives at night covering the market of crypto right before the daily flip, and then I'll do a couple updates during the day just based around crypto. So this is our chance to cover the whole market. Jake, thank you so much for always hitting that like button. I appreciate that. So as we get into this, I think we'll start with the Dow. So the Dow is down 79 points today, or 0.24%, down to 33,659. What we need to remember with the Dow is we're in a broadening wedge. This has come up to our first layer of resistance. So more than likely in the daily, if we do get rejected here, this would be the rejection point. You'd come through, you'd show in 33,906 is a major pivot level. That's a level where I feel like we would advance back down. There's about a 75% chance that this would hold as a resistance. So just remember that. 75% chance this is a resistance, and it would have lasting consequences here. Because then the Dow Jones, Codizer, welcome, and I greatly appreciate you tuning in as always. Appreciate the continued support. If we get rejected here, then you swing back down to 32,508. But more than likely, this is setting up for a return down in the bottom of the broadening wedge. The last time we hit it was in March of 23, and it took us all the way until August of 23 to finally get resistance again. And this, if it breaks through here and gets rejected, that would be a failed inverted head and shoulders. It ran up and it failed so far. We were unable to break the broadening wedge, which to me suggests we're going to come back down here and see if we have support likely. And this area brings you somewhere down around 31,000, if not lower, depending on how late you hit it. So if we're going to stay bullish with the Dow, we've got to get back up and over. First layer, 33,900, but then ultimately back over 36,000, and then we can break to the top side of the broadening wedge. Otherwise, we run the risk of coming down, like I stated, down here to roughly 30,900 roughly. Yes, like Terry said, please hit that like button. And if you want to go a step above that, make sure you share this on social media. Those are the two ways to get this to move through the algorithm. You know, in these times that we are struggling here, because a lot of people are losing faith in the commodities and the crypto, mainly crypto who watch me, but they're losing faith in the market as a whole. So I'm trying to make sure that you stay on the same page with the markets and you don't get played. The DXY is at 105, spot 91. As you know, we did come down, and now we're trying to see if we're going to continue coming down to the 200-day and the 4-hour time frame. Right now would be the best chance to either hit the 20-day or come up here and reverse and hit right around 106.23. Our first resistance point has already been met at 106.05. That's the 20-day on this bearish cross. Nobody says you have to come up to the broken channel, rising channel, and hit 106.30 area again. It doesn't need to happen. To get a rejection here on the 20-day, it can very well push it back down to the 200 at 105.30 and then continue down on this hellish trajectory. Because more than likely, you're going to work your way down, just remember this, to that 103.52 to see if this breakout, or your other layer that you could do is, I suspect, it could try to bounce off of here as well. So those are your two layers. So, JW, welcome in. I hope you're doing great, my friend. I'm so blessed to see you in here as always. Such an awesome feeling to see you in here, and we have such a great group in here today. A lot of my friends are in here today. I love seeing it. Love seeing it. So that's with the DXY. Pay very close attention. This is starting to turn on the bearish side of town. If they keep printing money, it would expand. That creates expansion of the money supply, and that would have no choice in time for the DXY to have a deep dive. We're getting closer and closer to 2024. That's when the BRICS nations are allowed, with part of their agreement that they signed to join the BRICS, that they're allowed to start getting rid of their greenback and they don't have to use it for petro. So get ready for gold-backed system in 2024 and a big decline in DXY, the US dollar, going forward. Tanya, my birthday sister, welcome in. I'm so glad you're in here. Thank you so much for not only being in here, but leaving great comments as well to try to educate everybody along the way. I seen a few other people that I need to say hello to as well. But Tanya almost snuck in here with JW. So just got to make sure I say hi to everybody. So that's with the Dow and the DXY. Before we get into the US 10-year, I want to read this real quick along the same page. So the stock market today, Dow slips, Treasury yields continue to fall. Stocks were struggling Wednesday following 3 straight positive sessions, with the major US indexes turning negative after opening higher. And if you wouldn't mind commenting, do you like to get kind of a poll here? Do you like seeing the information behind what I do on the charts and giving you a quick rundown of what's happened throughout the market like I am right now? Or do you prefer just the charts? I prefer doing it this way. A little bit of background, get into this and finish it off so that you can have a complete understanding. But obviously everybody has their own way. Jake Turner, welcome in. I had to buy at more XRP a few hours ago. Dollar cost average. Excellent. Devin, welcome in. I appreciate you tuning in. And dollar cost average is the key in the bear market as we're in an accumulation phase. Tanya, thank you so much. Says absolutely. This way, my favorite part of the day. Thank you, Kyle, so much. Scotty, thank you. Do a mix. Excellent, John. That's exactly what I wanted to hear. Great response, everybody. Thank you. So let's just read this again. Stocks were struggling Wednesday following 3 straight positive sessions, with the major U.S. indexes turning negative after opening higher. One possible reason for the reversal: ongoing uncertainty over markets. A little bit of everything. Yes, indeed, JW. So one possible reason for reversal: ongoing uncertainty over markets. The sigh of relief in bond markets continued after several Federal Reserve officials recently suggested the central bank's rate hiking campaign could be coming to an end. The reasoning they use is unacceptable. They said basically because of what's going on, higher prices, the cost of inflation, the wars and everything, that's basically like having another rate hike. So they don't have to raise hikes or hike rates again. This is going to be the new narrative. So just pay very close attention, have your ears open, but understand the truth. This is not good. Other big news: Luxury is out. So is kidney dialysis after the latest Ozempic trial. And Caroline Ellison continues her testimony in Sam Bankman-Fried's trial today. Stocks fell. The S&P 500 and the Dow Industrials dipped, while the NASDAQ was marginally lower. The benchmark 10-year U.S. Treasury yield, which we'll get into in a minute, eased to 4.62% from 4.654. On Tuesday, Birkenstock started trading at $41 a share. It was its first day publicly offered, compared with its initial public offer price at $46 a share. First time we can get into it. LVMH shares tumbled and dragged down others, the gold-plated category. ExxonMobil struck nearly $60 billion deal to buy Pioneer Natural Resources. Share fell. Producer price data for September came in a little stronger than expected, with a 0.5% rise, but core producer price rose just 0.2%. Tomorrow, investors get the latest readings on consumer inflation, so we'll talk about inflation tomorrow more. So that's what's going on across the markets, at least from that perspective. Zocstar, welcome in. Angela, good afternoon, love. And I missed one person. I'll read that in a sec. So the U.S. 10 years we just talked about down about 5 basis points. It's 10-year government bonds. This is what it's yielding, 4.61%, which is down 0.05 basis points or 1.05% on the day. And if you're looking for XRP, make sure you watch my XRP update from earlier. It's got roughly 1,000 views, so it was, in my opinion, it was the best video I've done in about a month. That's just, I'm a very harsh critic of myself, but we're looking for crude oil to at least reverse down. I don't think this 20-day is likely going to hold. I think because of the FUD that's out here, the U.S. coming out and saying they're going to try to price it at $60 per barrel, I think that does have a small impact and they're going to work it down. So I think I think the interest rates on the government bonds are going to try to consolidate as they're going to try to bring crude oil down. They're going to try to de-escalate the rise in the U.S. dollar. I think this is the consolidation now to brace for that kind of a move so that this can parabolically spike. So let's put it this way. If you can't hide out in the dollar, if you can't hide out in the dollar or crude, people might be looking at us. Watch this. So as the other ones went up, this is starting to reverse, and now they're starting to correct. If they have their way and crude oil does come down to around 60, which I don't see how it could happen, but that's what the U.S. wants to do. We don't have any reserves left, so I don't see. Thank you for that. Terry says that you preferred the info and this. I do too. So I think this is preparing now, and it might come down. We very well could come down here to like 4.1%, even 3.85%. I don't know, that would be far-fetched. But we could be preparing for an eventual big spike here. I think the most likely scenario is you would probably tap out somewhere around 4.38%, if we're being honest. You come down here, you convert and confirm right around 4.3%, that cup and handle makes the bullish handle, and then it comes up here as crude oil falls and as the DXY starts coming down. You're going to have to hide your money somewhere, and most people will hide out in the government bond, so they'll rally it. No one's going to buy it as it comes down. It's just not going to happen. So that's my own little theory with that. With crypto, we did talk about XRP many times about possibly having a run to the rising channel, and this is all I'll talk about XRP at 62.5 cents. The problem was we had our pivot point that was our tactical run up to 55 cents that we failed twice, and then it ended up pushing us down. So that's what's kind of happening here. Just the opposite angle here. Robbie Best TA8, I appreciate that. Thank you so much. I definitely switched up the style a little bit this morning, and you know, I mixed together what I've learned over the last almost 2.5 years now on YouTube, and I liked how the approach was this morning. Much more laid back, much more informative too. So crude oil, the aforementioned, is down 2.22%, or down $1.91 a barrel to 84 bucks flat. We do think that with crude oil, there's a very strong chance that we do correct, but is it going to come down farther than this area at 80 bucks? That's the question. The only other option for crude oil is that we would come down just a little bit farther, and we'd come down to this 200-day, but that's right at like $80.96. So that seems to be the area of concern. Now, does it have to come down there? No, but we did complete a death cross here in the 4-hourly. We got rejected on the 20. So now it seems to me like we're heading more towards the $80 a barrel. If we break down farther than 80, $77 is where you need to hold. Otherwise, you lose this cup and it's a failure. So just pay attention to that. But it's still very strong. You're just looking for a corrective phase. It could even go down to 77 something. But other than that, if it holds that, it's very bullish. Gold, silver, 85. And remember, wars are bullish for crude. Maybe not for, it's not good for us, but you'll see. 85.198. Up to almost 2.5 cents on the day, or 0.03% to 85.198. So 85 ounces of silver to equal 1 ounce of gold. Looks like we're putting in a right arm here. So we came up. If we do get rejected on the 20-day on gold silver chart at 85, it could very well come down. But if we can hold this structure, it looks like a bear flag to me, though. We very well are going to find ourselves back down here at like the 81, around 81. Can't help the way the market's cycling right now. And you'll see the support in here with gold, silver, the charts. So we'll see. We'll see if there's any support up here. If there is, we'll bounce off the 20-day here at 84. So look at the 84-to-1 ratio. We need to bounce off of that when we come down. But the reason why we're having so much volatility, Mike, welcome in. Jan, good afternoon, love. I greatly appreciate everybody tuning in. Steven, welcome in. Thank you so much for tuning in. We've got 38 people, 39 likes on the midday market report, and I promise we're almost done. 41 people. I promise we're getting through this, ladies and gentlemen. But I think in the title going forward, I'm just going to say the midday market report and then have the date. What do you think about that? Midday market report, Wednesday, October 11th, 2023. And that'll just be the title for the midday market report. And tomorrow will be October 12th. Instead of saying stuff about the rest, I think just having the midday market report up there will make it easier to understand. But I would love your feedback, as always. So we've got gold at $18.71, up $12.17 an ounce at $18.71.62. We are absolutely... Steven, welcome in from Belgium. Sully, good afternoon, and thank you for tuning in. JW, thank you for that vote of confidence, saying excellent. So gold, we fell out of here. So here's what's happening. Gold fell out of this descending triangle. And we talked about this while I was doing it. If you're new, now we have to retest it for a further move down. This is the technical target. So until we hit 1787 area, I would say, I would definitely say that this is more than likely going to get a rejection, and a 75% chance we end up at 1789, and then about a 55% chance we end up at 1725, 35% chance we end up down at 1680, and I would say it's a 20% chance we come revisit this down at 1647, which is the bottom of an old uptrend. We really don't want to be down there because that's a wider formation. And if we come in there, we've essentially started a broadening wedge. And what I mean is, this pattern would start its own wedge, a broadening wedge. And likely it would go resistance, support, and then we'd have to see if it plays this kind of a formation. You really don't want to play that. So let's just watch for now. It looks like more than likely we're coming down. Terry says you are nailing it. Macro effects are everything long term. TA will give you the short term movements and do. Yes, thank you so much, Terry. That is an excellent analysis of what I do, and a great analysis of why it's so important to watch the short term to give you a macro perspective as well. Micro and macro work in tune. So as we know, we came down and dropped first down to here. We didn't quite hit here, but we figured there'd be a rebound back up here to retest the drop point. We're looking at about the $22.50 area, and once you get rejected there, we should carry on. And our first layer should get you to $20.35, and there's about a 75% chance we could follow through because the technical target's at about $18.07. So we will be very, very observant of this because I've got 7,000 to 10,000 that's going into B2 Gold, as most of you know, and that'll start in a very near future. Eddie, welcome in. I'm so glad you're here. Miss Vicky, good afternoon. You're coming in towards the back end of this, but that's okay. The midday market report's almost 18 minutes in, and we are almost done. The last two things we're on, and then I'm going to go see how Julie's momming and stuff with that. All right, thank you, Terry. Yes, I'm going to stick with the midday market report and just the date. Like midday market report, Wednesday, October 11, 2023. I just feel like there's too much to try to put on the back end. Thank you so much, Miss Vicky. And then, I should be back tonight, assuming that I can, nothing keeps me from live. So that's what I'm looking at here for silver. And then since I've got your attention, let's take one more look at B2 Gold. Don't be fooled here. More than likely, this is just a rebound attempt for the shorts covering. We have a big bear flag, had the initial breakdown. Now, more than likely, like I've said, you come back up to around $3.20, you get a rejection, and then you can finish the technical target down to 240. This is where they try to liquidate the shorts before the eventual move. I'm XRP Future Millionaire. If you got anything on this, please make sure to hit that like button. Consider subscribing to this channel. It's been a spectacular midday market report. If you want to show extra support, you can always join Tom's Army, or you can send a YouTube Super Chat. I'm C Prosperity. Welcome in. Thank you for sneaking in right here at the end. Crypto Solo Scrooge, better late than never. Make sure you watch Crypto Solo Scrooge here on YouTube. He covers Sologenic, anything really to do with the XRP ledger. But yeah, make sure you guys watch this from the beginning, and it's my honor and privilege to bring you the midday market report. We'll log off here at 2:22 p.m. Eastern Standard Time. A sign the angels are watching.